What's up everyone, it's Scotty with Money Vesting. In this video we are going to be talking a little bit about the technicals because there was a new report from a technical strategist suggesting that a market top is very close for both the NASDAQ 100 and the S&P 500, and the volatility is going to start getting increased once again. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. There is a 16% annual discount that does expire at the end of this month, so you will get access to all of that, including our private live streams as well. I've been meaning to upload the videos here on YouTube for a long time, and YouTube's having issues with YouTube TV, some critic content, and some other services as well. So the market update obviously did not come in time. So hopefully by the time you're watching this video, the market update is already uploaded and you're able to view that for the previous trading day. Because this right here is something that I tweeted, again, to them. Come on, been stuck here for 30 minutes. And there's been a lot of reports of YouTube being down. And they pretty much mentioned that we're working on a fix, and we'll get back to you once there's an update. So God knows when it's going to be fixed, hopefully soon. My fingers are crossed. But again, I do apologize for the delayed upload because YouTube was not able to process those videos. Anyway, so going over to some of the technicals. So NASDAQ is on the verge of exhaustion, says famed technical strategist Tom DeMark. And I wanted to go over this specifically because it was quite an interesting way to analyze the markets and just analyze the technicals in general. So stocks have climbed a mountain of worries this year, ranging from lingering inflation to bank collapses to possibility the U.S. Congress might just decide not to pay its bills, so U.S. debt default. But has the run, also fueled by excitement over artificial intelligence, gone too far? That's the real question, and I think we can all agree that it's very clear to understand what's actually driving the market here. It is a lot of excitement, it is a lot of sentiment, it is a lot of AI-related hype because valuations, of course, the fundamentals, the actual the numbers don't suggest more upside because of how high the valuations are. And I've talked about this in my other market update, going over the top 7, going over the companies that have gone up the most, and their valuations have really moved up quite a bit, with an average P multiple sitting at 40, I think over 45 to 50, and median price earnings multiple sitting about over 30. So that's a suggestion of Tom DeMark, who was recently celebrated by the Technical Analysis CMT Association and the founder and CEO of DeMark Analytics. He focuses on the number of days, which don't have to be consecutive, by the way, and there was a close lower than the low of 2 days ago. So really, it's just a way to analyze bullish versus bearish engulfing candles. So what he's really saying is that he focuses on the number of days that there was a close lower than the low of 2 days ago, subject to various conditions. And when the countdown reaches 13, that's the actual number, 13, a buy signal is triggered, and that also happens on the opposite side, also on the other side, which the opposite is also on the case on the way up. If the 13 number appears, that triggers a sell signal according to his analysis. So in an email to MarketWatch, DeMark, who has advised advancing legends Paul Tudor Jones, Leon Cooperman, and Stephen Cohen, says the NASDAQ 100 has been in this extended uptrend, but now it's likely approaching exhaustion. So this right here was the chart that he suggested that there was a 13 indicator, back in November, when there was sort of like a buy trigger. And right now what we're seeing is, once again, we're approaching that number here. Right now I think we're at 12, and this is going to approach 13 very soon, which is going to trigger some type of this selling signal, basically. He says NASDAQ 100 13 top will need to be both a higher high as well as a higher close than Tuesday's levels. And this will be the first time this year the NASDAQ 100 time and price trend exhaustion components should be in sync with one another. And once they align, a subsequent close less than both of those closes 4 and 5 days prior should confirm the nascent downtrend, is what he mentioned. He also identifies another change. He says the 5+ month of NASDAQ 100 outperformance over S&P 500 is about to reverse. So we have really seen, of course, the NASDAQ outperform the S&P 500. So this, by the way, is the QQQ chart. You can see that we are in this consistent uptrend. The chart basically suggests that the first buy signal was triggered here back in November. And it's going to potentially trigger somewhere around here. And when I look at the previous resistance from back in August, I mean, we are approaching that level again. And not to mention that this has obviously been somewhat of a concentrated rally. We tried to broad out a little bit today. But overall, of course, you've seen QQQ divided by SPY this has been quite an interesting outperformance of 5 consecutive months. So you can see actually 4, 1, 2, 3, and this right here, April was a little bit flat, and then another very strong month of outperformance in May. So this is what he's saying is will potentially reverse moving forward. But he doesn't necessarily think that that's good news for S&P 500 or SPY because currently SPY is a sell countdown 11 and requires 2 successively higher highs and closes greater than the February 2nd high to record a possible market top, which must then be confirmed. So he's also suggesting that even S&P 500 is going to be at a potential top here, but the selling might be more aggressive in the NASDAQ relative to the S&P 500. Hence, the actual relative performance will reverse on the SPY and the QQQ. So hope that kind of makes sense. And when it comes to volatility, when it comes to the VIX, he says may be able to move higher. VIX is both sequentially and combo buy countdown 12. And with an upcoming new low close should record buy countdown 13. Typically, market responds to VIX 13s within 1 to 3 trading days after 13 is recorded. So we're not quite there yet, but he's suggesting a couple more closes below is going to mark that 13 signal, and that's in green. That means it's going to be buy for the volatility and of course a sell for the markets. So let me know your thoughts down in the comment section below. What do you think? But going back over to QQQs, there's no doubt that we are certainly moved up quite aggressively. I mean, from our lows of back in January, I mean, the NASDAQ ETF specifically is up 28%. That's obviously a lot of momentum. And I know the idea behind, hey, nobody cares, nobody really is paying attention, or people just don't care, they want to buy, can make sense until it doesn't, right? In other words, the music is playing until it's not, right? It's just really the idea that, yes, nobody cares about it right now and everybody wants to buy technology names and, markets are pushing higher, the sentiment's strong, but we have to really understand, what's already happened, but what is potentially going to happen so we can manage our risk well. It's all about risk management and kind of understanding what the downside potential really is for the market. So what I have here is a potential trade idea. So if I invert the chart here, what I will tell you is that I am looking for a potential SQQQ long, and that's going to be a levered ETF on the short side of NASDAQ. So be careful, that's levered and it's also very aggressive and volatile. So if you have never traded them before, just be careful, do your due diligence, do your risk management. But what I will be pricing in for is a potential move to the upside. So the goal would be to basically, this right here is going to be that chart. So as soon as it approaches 334, that's going to be in line with this previous level from back in August. I will be looking at potential upside of at least down to 321. So this right here would be a potential trade idea. If the QQQ continues to move up, I will be looking at a potential hedge on SQQQ. That's going to be again on the short side of the NASDAQ to get a little bit of a move back up. And again, this is an inverted scale. So if I invert it back, what I'm really talking about is a move lower down to 321. And if it does break to the upside, then again, that's going to be the stop loss at under 1%, and we'll be getting out past 334. So that really would be the plan right now as a potential hedge and as a potential swing trade idea on the NASDAQ. More details will follow in our Discord. So again, if you want to join and again be a part of our money investing community, link's going to be down below. But that really would be what I would be considering and looking at just because of how the market breadth continues to be very concentrated. If it starts to broaden out a little bit, then I think the S&P 500 has more upside compared to the NASDAQ. But NASDAQ more specifically, I think, is going to start to approach a little bit of that resistance, and selling pressure can start to gain some momentum here as buyers start to lose that momentum and it starts to get a little bit more exhausted. Anyway, let me know in the comment section down below, what do you think? As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel, link to our Discord, Patreon down below. Again, you'll get access to all the swing trading ideas, all the buy and sell alerts, all those different benefits. As always, happy investing. I'll see you all in the next video.